Hi everyone, let's go over my low time frame bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my low time frame bullish scenario, where we are looking for an expanding flat to the upside in an ABC, where the most common target for wave C is between the two 1.618, which is between 29.8k and 30.4k. And what is interesting is that we also have that triple top at about 30.4k. So grabbing the highs and then moving towards the downside is definitely an interesting scenario. Now, the most common target for wave B in an expanding flat is between the 1.236 and the 1.38, which is a fib pull from the low to the high of wave A. And on the Coinbase chart, you can see that this level has been hit with a 1 minute wick. So if we go to the 1 minute and I zoom out, you can see this wick over here hitting that target area. However, on the Bybit chart, it did not yet hit the wave B most common target area. What did happen on both charts though is that if we look to the left side and we go to the price section of the 21st of June, then we have a low over here, and this was the last low before you have a little bit of a gap. Now on the Coinbase chart, this low over here has been taken, and if we go to the Bybit chart, then what you will see is that also on the Bybit chart, this low has indeed been taken. However, the most common target area of wave B has not yet been hit. So over here you can see the 105 has been hit, which is a rare target for a wave B. However, the most common target area for a wave B has not yet been hit. But at the same time, the same low has been taken on the Bybit chart, which is this one over here before the gap. So this is something to keep in mind, that on the Bybit chart and maybe other charts as well, the most common target area for wave B has not yet been hit. So the potential is still there of then moving towards the downside in this scenario to make sure all of the charts go towards this area before a move to the upside. But in general, what we are looking for in this particular scenario is an impulsive structure to the upside in a wave C. If we then go to the bearish scenario, then we are looking for an impulsive structure to the downside after a WXY correction. In this scenario, we are then looking for an impulsive structure to the downside in a 1-2-1-2, the beginning of a 3 to the downside, where you want to see the highest amount of volume and a very impulsive, usually quite parabolic move towards the downside. If we look at the support areas towards the downside, then the first area down here is between 26.8k and 27.4k. And as it stands now, price is basically finding support on the low, wicking the low, as I just mentioned, this one over here, as well as wicking this low. So that is currently the support that's basically like holding price. But if we go down once more, might be going all the way to the downside towards the 27 low 27k area. Now, what is not that nice in this particular scenario is that the double 1-2 that you see on the chart is an expanding diagonal and not a contracting diagonal. So preferably in a double 1-2 or even a triple 1-2, where you have a wave 1, 2, 1, 2, 1, 2, you like to see, preferably by far most commonly, a contracting diagonal. But as you can see, that is not the case over here with this 1-2-1-2. It's an expanding diagonal, which lowers the probabilities of this particular bearish scenario. Now, talking about probabilities, this morning I've had a very busy morning because I've been talking in Discord, and the people that are here specifically for the analysis and the probabilities, please continue to the timestamp of the bullish support resistance flip. But for the ones that really want to learn how I analyze all of this in the morning, please hang around, because what you see here on the right is what we're going to go through, because I've written this at, let's see, at 8:30 a.m. in the morning, which is 1.5 hours after I posted my video this morning in Central East European time zone. I pressed on enter and I put this in the YouTube Silver members group. And this is basically me analyzing the chart and using Elliott Wave rules to make sense of what is happening. And it's actually very important for the ones that enjoy learning Elliott Waves. So let's jump in. First of all, there's 3 pictures that I have over here, and it's important to know what each picture is. So picture number 1 is the WXY scenario. Might be very small because I have a split screen now, but it's basically this scenario over here. This is picture 1 when I talk about picture 1. Picture number 2 is the bullish scenario. That is the ABC expanding flat. And picture number 3 is the impulsive scenario to the downside, right, where we're looking for lower prices. So now you look, now you know the pictures. I'll have the split screen on as well. Let's go through the text and figure out how I analyzed this part of the chart, because it is not as straightforward as you might think looking at the Elliott Wave rules. So let's start. So I've been checking, and this is in the morning, right? So I was doing my analysis. I put the video online, and then I started thinking, but wait a minute, I am not happy with having a WXY scenario inside wave Y, because I believe, and I kind of like forget the rule in the morning, that a WXY in a wave Y, I think, is not allowed. So I've been checking the Elliott Wave theory, and yesterday at 7 p.m. and I believe this morning as well, I mentioned in the video that a WXY in a wave Y is not preferred. After research just now, that was then in the morning, I can confirm a WXY is a complex correction where the individual waves, right, are in wave W a flat or a zigzag. In wave X you like to see a flat zigzag or preferably a multi-zigzag, and in wave Y you want to see a flat zigzag or a triangle. Now in the video this morning I spoke about a WXY in wave Y, which is wrong and was mainly due to, first of all, time restraints, but also analyzing the charts early in my morning, and I was a bit doubtful about the rules. Like I kind of like forgot, but I didn't really have the time to do thorough research at that moment in time. So now, as you can see, wave W needs to be a flat or a zigzag, which means this wave W has to be a flat or a zigzag. Now, if wave W is a zigzag, wave Y is not allowed to be a zigzag in a double combo. That's important. So this leads us to a few problems with the range locally, which is what I have on the chart over here. Picture number one, which is this chart number one, this count. Wave W is clearly not a flat. It is not an ABC, which is the most common flat. It is an expanding flat, right? Clearly that is not the case. So we have to think about this being a zigzag structure. Now wave X in this particular scenario is then a double zigzag in a first structure, then we have a second structure and a third structure to the downside, a double zigzag, zigzag 1, then we have X and zigzag number 2. But wave Y, if wave X ends over here, is also a single zigzag. So the problem becomes W and Y are zigzags, but this is not a classic double zigzag corrective structure. So in a double zigzag corrective structure, wave Y has to finish above wave W, which didn't happen. Clearly didn't happen. Moving X to the left pivot means a double zigzag in wave Y, which isn't allowed. So if I would move this X to the left, then now inside wave Y we have a first zigzag, then a move down and a second zigzag. But that's not allowed in a wave Y, because you want to see simple structures in a zigzag, a single zigzag, a triangle or a flat. Simply said, this sideways correction can't be a WXY at the moment. There's not really an option to use WXY to finish this range. And that is important, to finish a corrective structure over here. It does not look plausible for wave Y to end this range over here. So we go to picture number 2, which then is scenario number 2, which is the ABC expanding flat scenario, right? So then picture number 2, therefore we divert to an ABC. Therefore there's two counts for an ABC, like for the numbers basically. You have the ABC zigzag, which is a 5-3-5 structure, or you have an ABC flat, which is then a 3-3-5 structure. Now clearly a zigzag in wave A over here, or a zigzag in general, is not on the cards, right? Because there's not a 5-3-5 over here. Also price took the low, so we can, like, you know, it's off the table basically, leaving the ABC flat. Now the rules in a flat are wave A and B can be any corrective pattern, but A can't be a triangle, and wave C has to be an impulse or an ending diagonal. So wave C, impulsive structure, right? And then a 3-3-5 wave move. So wave A can be anything. So that works in this count, because over here we can't count a flat. It's like possibly a zigzag, it is possibly a WXY, but both of these are allowed in an A, because all the corrective patterns are allowed except for a triangle. Wave B is tricky here because the recent move down looks impulsive, which is this move over here. However, as I just mentioned as well, the double 1-2 in the video in a 1-2-1-2 scenario is not a contracting diagonal, which is not preferred, because the situation that we have is that it is an expanding diagonal over here, as you can see, right? And this is not preferred in a double 1-2 scenario or even a triple 1-2 scenario. The fact that that is not the case, so there's no contracting diagonal, increases the probabilities there might be some three-wave shambles going on in this move towards the downside or in combination with the previous price action before, which then fits a wave B. So if we scroll down a little bit, right, it's I know this is going to be a long video, but hopefully you learn, and because you can read it as well, I hope you can look back at this video and then understand my thinking, because I literally wrote it while I was analyzing the chart and thinking. So then in this scenario, wave A is in, wave B is probably some double zigzag structure, either finished or down once more, as explained with the Bybit chart as well, to reach the common target area on Bybit as well. However, both of the charts did wick below that little low that we had on the left side of the chart, right? So that is something to keep in mind. To potentially fill the wick as well. If we go down, we fill that wick, but there's not much support, right, below this area over here as well. So one can imagine it's preferable that the low is made, because there's not much support below this low. We wick the swing failure pattern, at least on Coinbase we hit this area and then have an impulsive move to the upside. It does depend on what we see more locally. Of course, this can also happen. It has to be said that wave B on Coinbase already hit the most common target area, but not on other charts, at least Bybit, right? So I already showed that. So the probabilities, let's talk about probabilities. Using the WXY count, which is this one over here. So I'm going to jump already a little bit to the probability section, but I want to just do this in one go because this was my thinking. So the probabilities then, using the WXY count, probabilities are low that the end of the range is in, if this would be true. I can't put wave Y on the recent high to finish the structure, meaning Y is not yet in if we are still corrective in a potential WXY scenario. Putting wave Y over here is very difficult to end a corrective structure in this range. Then if we go to the ABC, an A zigzag doesn't work to finish this structure, this being a wave A in a zigzag, right? So A zigzag doesn't work to finish this structure already, then a flat is next. So the flat is basically what is left. But it also means this correction isn't finished yet, because in a flat correction, we are looking for another move towards the upside. So it's not finished. So we have the WXY scenario where we can't really finish the range over here. And we have a zigzag that is not possible, but in an expanding flat, the correction is also not yet finished. Hey, that's interesting, right? Both of these scenarios say then, hey, it might not yet be finished. That means the correction is not yet finished yet, and we want to see a 5-wave move up in a flat. Most probable flat is an expanding flat, taking the low of A, and this happened over here. Triangles, I can't count any triangles over here. I tried my best, but there's no triangle there. So probabilities then, low that the corrective structure is already finished. So the probabilities are low that the corrective structure is already finished because there's difficulty to count it in such a way that the correction is finished for an impulse to the downside. In other words, probabilities are higher that we go up once more. Of course, don't forget, it can also be something like this, right? Probabilities are higher, we go up once more, either in a Y or a wave C, because you can also have a WXY like this for your information. Preferably, the low is in, wick the previous range low as well, because below this, there isn't too much support, but we continue to observe. So now I had properly the time to look at the chart. This is my analysis. And again, like, you know, I hope you enjoy all this stuff because people are learning also in silver. And I share, of course, my my updates. So of course, be sensible, because when we look at the chart, we still see a sharp move to the downside on volume. So make sure you have a solid plan, wait for your entry requirements, and stick to the plan. So yeah, this was what I posted in silver in the morning. Very, very important, sharing there my thoughts about how I analyzed this chart and went over the different rules of Elliott waves to eventually come to a plan. Now, if we then finally then continue with the video, then a bullish support resistance flip that I actually found on the chart, which can act as interesting support, because if I look at my target boxes, of course, the next target box support is all the way down here. But between where price is now and the target area down here, we do have this very interesting support resistance flip area. Resistance over here, bit of support, move down, resistance once again, and it could act as support. You can see It's not yet been hit, but if price would potentially move down once more to make sure this common target area of B is hit on all the charts, then this can act as support. So that is something I liked to show you. If we look at the CVD divergences more locally, there's actually not too much going on. We have bearish CVD divergences. If we look over here, then you can see lower high on price, higher high on the CVD in yellow, and also more locally, lower high on price on blue, higher high on the CVD. Even maybe more locally, lower high on price, higher high on the CVD. However, there's a couple of things that I like to look at when I look at CVD divergences. And if we then go down, by the way, this, you can read this as well if you want over here, combination 33. It's in Discord, also in the general chat. But when we look at CVD divergences, what I prefer personally after a big drop is to see structure. So what I am then looking for is a bit of a structural move towards the upside, some waves being created before I start to trust potential bullish CVD divergences. Also, I prefer to look at divergences on the right side of a new high or low and not taking into account previous structures over here. So preferably I'm looking only over here, and yeah, we do have a bit of bearish CVD over here, so we have to at least keep that into account. And again, I like to see a solid structure to the upside and then a bit of a range as well, because we came down on volume. If you check the volume, we came down on high volume, and I won't be surprised if we make another low on lower volume to take this low. Not sure about this big crazy scam wick potential low over here, but at least we have to keep in mind that price might go a bit deeper. Then we have news coming as well today. So we do have news at 4 p.m. Central East European time. So make sure you trade safe around these times. And then finally, if we go towards the probabilities, which you already know that actually on the lower time frame, it currently looks more likely that this corrective structure is not yet in, and we have the potential to look for another move towards the downside. Of course, this can happen, but because of what I explained in the middle of the video, currently it looks like a higher probability of price still moving towards the upside at least once more before then potentially moving towards the downside. It all depends on how price then moves towards the upside as well. So I hope this video was helpful or valuable to you, sharing my knowledge and how I analyzed the charts this morning. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.